Hello and welcome to another market recap. So this recap is from Monday, the 29th of July till Friday, the 2nd of August, I believe it was. You have to forgive how I sound and how I look, please, because I am currently unwell. Whether it's a cold or something, I don't know, but I'm feeling pretty horrendous, so forgive me for if I sound very nasally. So this is the week after we've had this glorious rundown when we banked that lovely percentage of 8.54%, which took us from just below 2% drawdown to just below, I believe, 6%. So my target for the first phase of the challenge is 8%, so I need a little over 2% to pass this phase. So let's see how this week goes and if we did that. Now, after this trend down, we have this ranging market here. I would never take this as a larger continuation to the downside. Some people say, you have this run down, you could have a pullback as a larger flag and then a continue down. With this pair, because of how corrective it is much more likely to just range and do whatever it wants rather than continue. However, we do have a general bias that market is moving to the downside, so we need to bear that in mind. At the moment, we're looking for a turtle soup because we are not in a trending market, we're in a ranging market. So we're looking to see either a break or a break of a low or the high of the Asian range. So we will mark those on right now so we can see what areas we need to be breaking. There we go, and we'll go down to the 15-minute to take a look to see what happens. So ideally, now we want to see a break to the high to come to the downside. As I said, the market is on a general downward trend. The bias is in a downward direction, although we're not trending. After that run down and this kind of range is favouring the downside. We're having a lot more momentum down than we are to the upside. So I'll be very cautious about taking a buy here. If it sets up nicely, we'll take it, of course. But if we get a trade to the downside, that would be glorious. So we have a shift in momentum to the downside. We close solid, large move down. What happens next? We continue and break this low. We only just closed below, but we do have a wick here. So now to get a buy, I would like to see a really nice retrace of this candle and a solid close. Like I am looking for a candle like this here, because I need price to tell me that it wants to move to the upside. And right now, everything is moving in the other direction. Move down, pull back, move down. I do not want to be taking a buy here unless it looks really good. So we'll see what happens next. We do not get a shift in momentum to the upside. We get a pullback, but it's not a shift. So I'm not looking for a trade here. And then price continues. We get a wick here, but continues. So saved ourselves some percentage there. And then it just continues. Yeah. So at this point, although we might see some weakness to the downside here, I'm not looking for an upward buy, because price is telling me that it is struggling to move up. As you can see, it's slowly moving up here, but we don't want slow move up when the bias is down. We want strong incentive up to tell us that it's going to be moving up. Here again, we break above. We have a little bit of momentum here, but compared to these moves down, it's just not enough for me. It's just not something that I was wanting to take, although we do slowly creep up, as you can see, but we get another shift down. So we've moved up, then we get a shift down. So I just walked away at this point, wasn't interested. Yeah, price moves back down. So it's not telling me that it wants to go because we're taking a trade all the way to the upside here. And it's not telling me it wants to do that. It's struggling a lot to do that. So no trade on a Monday for me on that one. Excuse me, I'm just gonna, oh, crikey, sorry, my sinuses are very cross. So let's skip ahead to a Tuesday. So that's 12. Sort this out. So we've got a wick down, which shows me that price might range or reverse. It did come below this part here, so there could be some liquidity here that it's taking, but the bottom of this range is here. There might be a pull here, but there's this low to be cautious of as well. But I wouldn't be taking anything at this point just because it's much later on in the day. We're in the New York session now as well. Let's see. So what's that? 11 o'clock. 12, 1, 2, 3, 4, 5, 6, 7. 6. Okay. So prices moved up, only got so far, then retraced. We got a shift up followed by a shift down, which continued down. Then we got, not really sort of a shift here, but we had a wick here, which retraced, slight shift back up, and then we continued to the upside. So now we are looking to see if we get a break of this high here to this low here. However, as I mentioned, at this point I was only just about 2% away, or just over 2% away from passing my funded challenge, which means I didn't need to target. If we go down to the 50-minute, so because I'm only 2%, so say if price broke and then retrace there, I wouldn't need to target this low because that's 3%. I didn't need 3%, I only needed 2% or something. So I put exactly the amount that I needed to pass my challenge as a take profit. But we'll get to that if the trade sets up as well as it did. So we break above, and again, remember that we're looking at the downward bias because the downward moves have been a lot stronger than the upward moves. So this was already really, really nice. We'd got this lovely morning star formation here. Morning star, where we moved down with momentum, got a wick down and retraced with momentum. So we've got a V-shape, morning star, whatever you want to call it. We have a correction, then continue upwards. However, what happens when we continue up? We range, and we get this really weak, trying to go up but failing. It's similar to a channel, but not quite. There is a slight channel here where we have this high retrace, break the high, retrace, break the high, retrace, break the high again. See if we retrace here. But everything was setting up right now that this was going to be an absolutely cool trade to take. And there we go. That's a nice entry candle. You see how we have this weakness up followed by a shift down. We have a nice solid close back below, which is exactly what we want to see. So we put our stop loss. I'll just use the one I used. I think it was this one. Yeah. Oh, so that's what I was. Okay. So here's how I did it. So 2 pips above the high, as per usual. But instead of just having a TP here, so for the turtle soup, my plan is 2 pips above the high or low for the stop loss, and then the target, I put my take profit at the low of the Asian range. However, on this one, because I was so close to completing the first phase, what I decided to do instead was to trail my stop loss like I did with a continuation pattern, which means if price moves down, retraces, moves down again, forming a new high here, my stop loss would be here. Same again if we continued moving down, moves up, so retracing, forming a new low, continues down, breaking that low, forming a new high, stop loss would be here. So I was going to trail my stop loss with this one, just so I can crawl closer to the point that I needed, right? So we enter into the trade at this point and price moves down. We retrace here, so this is the low here, still having the high over here. So we're waiting to see if this low is broken so I can move my stop loss. Come back to the entry point. And here we break the low. So now my stop loss is 2 pips above this high here. So it's not in profit. However, we have reduced risk. So if I do lose now, if this trade gets taken out, it only gets taken out for less percentage than 1%. Excuse me. Continue down just about. Yep. Continue. Retrace here. This low does not break this one's low. So now again, we're waiting to see if price continues down, which it does. So now my take profit is 2 pips above this high here. So now we have got profit locked in. Move down, another retrace, another continue. So now my profit is 2 pips here, above here. So even more profit locked in. Another retrace, continue. Same again with the thingy. Continue. Retrace. That candle was subpar. It was on the same level as. Then we continue. So I'll move my stop loss again. Oh, we have news here. Oh yeah. This one, let me tell you something. This was lucky for me. This was so lucky, guys. Break again with stop loss. I just forgot. I honestly just forgot about news. Even though there's literally a symbol right here that tells me I have news, I literally just forgot. So it's, yeah, almost 3 o'clock now, 15 minutes to, but I'm just focused on this trade. So this closed. So on this account, I can't open or close positions 2 minutes before, 2 minutes after, and in that window. This trade closed out 2 minutes and 17 seconds past 3. I was 17 seconds away from losing this whole account. And it literally just tapped my TP, and that was that. And it closed out, and it was, I need to be so careful of that. Watch the news events. This is the first time this has happened, but again, it's there's a first time for a lot of things in this funded account for me where I've just been making silly mistakes like that. But this one was very lucky, but it was a very good warning of, watch yourself, because if that had got taken out straight away, that'd be done. But I got the trade that I needed, so now that was the first phase completed, right? No, it wasn't, because I forgot a few things. I got my numbers slightly wrong. I think it was because where the spread was, where I actually entered, it wasn't quite right. The trade itself took me $3 away from what I needed, and then there were also commissions that I completely forgot about. So that took me $15 away from the total amount that I needed. $15. So what did I do next? Well, let me tell you. I only needed $15, so I was going to take a quick trade. For a very small amount, and I did this on the 1 minute. Now let me tell you a thing. Pardon me. So I enter here, okay, because I just need price to climb up a little bit more by 2 pips to get me my $15. And I risked 0.25% here, just to get enough to get that $15. However, if we look at what price action is doing, it is moving up in an ascending nature. An ascending nature means it's moving up, failing, retracing. Moving up, failing. You see the shift here, retracing. Moving up, failing, moving up, failing. And what do? I place a buy. Even though I've got a whole thing here, I didn't even look at price action. I was just so tunnel visioned on, I just needed to move up a little bit more. And I was looking at what I needed and what I wanted compared to what the market was actually doing and telling me. If I had reversed this trade and I could have, targeted this low here or targeted whatever I needed and put my stop at like above, well, basically literally reverse this, right? Because spoilers, that's what happens. Then, I just didn't pay attention to price action here. So it went up a little bit. It like barely went into profit, and then it went down and took me out eventually. I think it was this candle here that my stop loss was a bit off on TradingView compared to my thingy. But either way, it took me out of this trade. So now I'm $128 or something like that away from completing my my thingy-mabob. Sorry, I just need to check price action on current price action, because I am waiting for on the M5. Okay, I am waiting to see if a trade sets up on this pair right now. It's a Monday, the 5th of August. But yeah, so this didn't play out because I wasn't paying attention to what it was doing. Wow. Until it did. If I'd have got this stop loss right on my thing, then that would have taken me out for the amount I needed, but I didn't. But there's me jumping into trades without looking at price action to try and get something. And then I almost took, there was another trade that I almost took. There's a few trades, because I was watching on the minute, and I was watching, and there was a few trades that set up. and I was trying to force where I could get into the market. I just wanted to be in the market just to get that last little bit. And I felt myself getting impatient at this point. And it got to a point where I was like, I need to just stop doing this. Where's the other? Okay, it's not coming up yet. I just needed to not do that, basically. Get off the 1 minute, focus on what I've got. I only needed to make a little bit, so I just needed to wait for another setup, which I believe was on a Thursday, my next one. Yeah, let's jump forward some. Let's mark this one to see where it is. It's over there. It's over there. Let's just jump straight to it. Yes, news. So, news in the morning. So, this was during the Asian session. Got to be careful of that. Not really looking for much there because obviously the high is all up there, low all the way down there, and there could be anything happening in between. So, we're just going to sit back and wait to see what happens. Price moves up. Evening on a Wednesday. There was actually, what was I looking at? There was a trade I was going to take, and I didn't because of how it looked. There was a continuation pattern that set up. I think it was must have been around here. It was a continuation pattern that set up, and I really wanted to take it, but one of these wicks really put me off. I think it might have been this. This is a news candle. It was a bit weird to take that, but I was looking, and I think it was this because it broke above. If this had closed solid, I probably would have taken it as a continuation. We move up, we retrace, we don't see a shift, we do see a wick down, but then we continue. But this wick here just put me off, and I can't just take a trade because I know I just want to take a trade just for the sake of getting in the market to try and finish this last phase of my account. But I didn't take it. Lo and behold, price moves down, so I would have lost out anyway. But yeah, it was, at this point, I really feel myself becoming impatient, and I'm looking at any opportunity to get in. Sorry, so I missed that. So here's the Thursday open here. Go down to the 15-minute. I'll just mark on this to see what. Oh, yes. So turtle soup here. Price range moves down, breaks the low, goes back up. I like this. I do like this trade. It closed how I like it. I was happy to take that, but then it retraced and moved back down here with momentum. But what happens after momentum? So this is like the third break. So we've got this area here. We break below once, try and go back up, fail. We break below again, but after this breakdown, price doesn't continue with momentum. And I was umming and ahhing about taking this. Retrace, wick down. This is such a nice entry candle. But I was really nervous at this point because I went from $15 away to $100 to $400. I think this put me at 0.75% away. So to go from $15 to 0.57% away, that's close to 1%. The emotions just hit me. I'm not going to lie; they just hit me, and I was worried about giving more back to the market. I didn't want to take the trade because I didn't want to lose more. I was so close yet so far. I just really wasn't sure. I was uncertain in myself, and the emotions really took over. But we've broke down for the second time into this area of liquidity, failed to continue, got a wick down and a close here. Okay, this candle isn't very big, but price is telling me that it doesn't want to continue down here. It might range, but it's telling me that it's struggling to continue down. And we broke below this low as well, look. There's a lot that just matches up here. So this would have been a really nice trade. However, I didn't take it. Again, I would have probably done the same where I scale. I follow my stop loss rather than just. I'd set the TP as well, but I'd also trail my stop loss. So how much I only needed it to go 1%, 1-to-1 ratio would have been fine here because I was 0.75% away. So that as a trade, when we're expecting it to go up anyway, and we're targeting this high, just seems a no-brainer. So it would have been entered in. It would have been a 45-minute trade. So not even an hour later. What was that? 15, 30, 45. 15, 30, 45. An hour later, I would have completed that phase. But because I was so nervous, because I didn't want to give more back to the market and be even further away when I was so close already, I decided not to take it. And I miss, it's another lesson to learn that don't worry about losing money if you're not losing money because you're placing bad trades, but because you're following your plan. Like, this was a solid trade. I was too scared to take it. I was letting fear dictate what I was doing. So I missed it on that, pretty bummed. But I had to just let it go. Had to let it go. But that's it for all the trades that I took this week. Nothing else happened. Of course, you have NFP the next day because it's the first Friday of the month. So yeah, I wasn't on that Friday. Nothing set up nicely, and look, it even went all the way to the top as well. It went to where we needed, like the full distance, should we say? I was even looking at getting in here because we had a. Was I? I remember looking at it because it was an ascending channel. Why did I miss out on that? Well, there's two parts. This candle is very similar to this one. Move up, wick up, shift down, but then we don't continue down. And this is probably why I didn't enter it, because I didn't get enough confirmation here. Then retrace. Then we continue up, break again, and then we get a wick up and move down. But because this looks so similar to this, I was like, well, we could just continue up, going up. But it ended up going down. But again, that's just me trying to jump into the market at that point, so I'm not really that fussed that I, didn't take that trade. Because again, this is me more forcing trades than taking actual ones that fit my plan. So be careful about trying to force trades, because if you get into the habit of forcing trades, you're more likely to do it more often and lose more money and end up blowing your account. That's another thing I want to quickly mention. I did get a message from someone. I'll find it and read it out, 2 seconds. So I received a message from Drone who said, I'm a swing trader and I do aim for 200 pips and above. I also trade prop firms, so I'm always mindful of the daily drawdown, but thrice I've been caught up on breaching equity rules. I really don't know if it's because I'm holding trades longer. What do you think I should do? I suggest you look at the rules to ensure you understand them and see where things are going wrong. Is it you have too many trades open at once, so although your balance is fine, your equity dips below what is allowed? Can you refine your setup so you take less trades? You may have to adjust your strategy to fit the prop firm style rules, so what can you do to do that? He said, well, I guess I have to refine my entries and just go for 1 risk, 2 reward, or 3, and focus on trading 1 pair. And this is something that I learned as well. Taking trades that give you a risk reward of 1-to-1, so you risk 1% to get 1%, just aren't worth the time and day. Like, it's really just, you might win 1%, but I mean, it's really not worth it at the end of the day. You want to be, my win rate at the moment is around 27%. If I'm risking 1 risk, 1 to reward, then it's not going to go very well for me at all. But because my reward is so much higher than 1, then although I've got 27% win rate, my average loss is $250, which is 0.5% of this account, and my win rate is $1,600. And I know we had those trades last week that changed that drastically, but it's that's, what's that, 4%. So my average loss to win is 1% loss, 4% win. So although I've only got 27% win rate, I'm doing much better than I would do if I was doing 1-to-1, right? Does that make sense? Does math make sense on that? So don't go for 1-to-1 trades. It's just really not worth it. You want at least 1-to-2. Otherwise, you're just throwing away money. It's risking 1% for no reason. But that's the only thing I want to share with you on that one. And that's all the trades I took this week. So as it stands, I am currently a bit away from passing my funded challenge. Let me see if I can find where I'm at with that. My equity is currently 53,568. I need 54,000, so I need just over $400. So it's I'm just under 1%, yeah, so 0.75%. I'm about to try and get that. And as I said, I'm currently looking at a setup, so actually we'll check to see what that's doing right now. If we exit that, this wasn't scanned planned news. However, we did have this shift in momentum down, followed by a large wick. So I'm guessing that there's a news event that happened here in Australia just because of the time, but maybe it wasn't in the US. Maybe it was just price action being price action, but it looks very newsy to me. So I'm looking for an ascending channel here because retrace, shift down, continue up. Although this, the high is over here and the low is over here, we're still having this channel in between. However, we failed to break this and we retrace, and now we're kind of just ranging in this area. So maybe if we break above and then get a solid, we can take a look at doing that. But we might just range from here. So if this doesn't set up soon, then I'll just ignore it because it's more likely to range out than it is to form an ascending channel. It was looking pretty clean with the quick moves up. So again, if this was a quick move up and then a retrace, then it would be looking nicer. But right now it's starting to fizzle out. So we'll just see how it goes. But yeah, that's all for this week. I will see you all again very soon. I hope you have a very fantastic week. Be careful, don't risk too much. Do your non-negotiables and have a very good week. I shall see you all soon. Ta-ra.